do consumption trends indicate? Abneesh Roy joining in for more on this is Executive Director Research, Nuvama Institutional Equity, someone who tracks the space so closely. Abneesh, great to speak with you. On the core question, if ever there was policy momentum required for a space, FMCG has definitely received it. Why has it not translated in your view?
Yeah, thanks and good morning. Good questions. Firstly, if you take any stock index, the issue is there will be some outperformers, some laggards. So that will not give you the true picture. You highlighted that, yes, some laggards like Varun Beverages. So we have been highlighting the Campa Cola risk, and the weather has been quite on the challenging side for Campa Cola and cola categories, even for Pepsi, etc. Because last 2 quarters we have seen very unseasonal rains, and this quarter also we are picking up that overall demand for the summer categories like cola, for beer, for some of the HI, etc. Even for some paints also, slight impact will be there because of very high rains in Q2. Second, if you see within the same sector, Britannia has done so well, and Tata Consumer, Godrej Consumer, Marico. So you have to see stock by stock and not the index. In terms of outlook, you're absolutely right. Whatever could go right from either God or from the government, I think everything has happened. So we have seen also monsoon in most parts of the country, it has done well. Of course, there is a flooding in Punjab, there is a flooding in Rajasthan. There is a big deficit, almost 25-30% deficit in the monsoon for Bihar. But I will say monsoon in any year, it's never a perfect. So you have to see the broader picture. Broader picture is that overall country will see more rural consumption boost. Now, the third point is, if you see last few quarters, urban demand, especially in the mid and lower, has been challenging. So because of this latest GST rate cut, I do expect that many FMCG categories will see boost. Coming to a specific point, what are the challenges? See, challenges are there. We are seeing this very quick timelines are there by 22nd September, which means in the next 6 days, we have to see the rollout of the new pricing. But government has also given that the existing packaging can be used. So you can just put the sticker and do that. We've also seen Hindustan Unilever kind of company come out with full page ads where they are saying on the affordability. So my sense is consumption will pick up because of 3 reasons. One is 5 rupee, 10 rupee, 20 rupee price point. Clearly, there will be a volume boost for every category where GST rate cut has happened. I think the real benefit long term will be in terms of the snacks and biscuits category, because that's bought as a pack. Second, of course, will be affordability. Suddenly, if the shampoo becomes affordable by 12-13%, and then the soaps also becomes affordable, you will see both grammage addition at the 10 rupee kind of a price point and affordability. So there will be customers who are earlier down trading to regional brands, to smaller brands. I think they will come back to their favorable brands because now they can afford it. So yes, I will say that this is a good buying opportunity in some of the FMCG stocks. Our topics will be essentially, yes.
Abneesh, sorry, can I just ask you? I mean, if I kind of expand the horizon slightly, right, and you understand this so well, so I want your insights here. That the thing that we hear from the buy side guys is that because it was a high ROE, high ROC sector, right, and it was not attacked, the distribution wasn't attacked. Now regional brands, online brands, etc., are coming in and attacking individual verticals of large FMCG names, which are also large verticals by themselves, and therefore can serve as a business for new startups or younger companies. Can this continue for the next few years, wherein we do not see pan-India giants necessarily having the size and the distribution advantage, and therefore their revenue growth, their ROCs, etc., and their margins continue to come off over the course of the next 5 years, and therefore their multiples as well might contract from where they are right now. They're already lower than what the average multiples were for the last decade. Can maybe those also go down lower?
No, I don't think so at all. India will not follow the US model of D2C taking market share from legacy player.
Okay.
India operates with its own thesis, with its own assumption, and with its own ecosystem.
But Abneesh, sorry, Abneesh, aren't we seeing that already in the last 5-7 years?
I heard your question. I heard your question. Let me answer that.
Okay,
and then you
sure,
can-
sure.
First is, see, three reasons. First is, if you see Marico kind of players are seeing 9 to 10% volume growth. Even HUL's volume growth has recovered from 2% to 4%. I would expect 6 to 7% volume growth there. So three things. One is we have seen legacy players really buying out a lot of these D2C companies. Oziva, for example, for HUL, and similarly Minimalist for HUL is seeing very strong growth. Same thing for Marico. So I will say that a lot of the good startups in the D2C will be bought out. Second important point is, see, D2C companies also need Kirana. And that is so difficult because it is a very limited shelf space. And we see that after a point, D2C companies really struggle. We have seen the listed space, for example, Honasa also struggle because of the same reason, that ultimately you need a tie-up with a large company in the FMCG legacy space. For that, you cannot just get that. Initially, e-commerce helps, but eventually you'll have to do that. Third point, if you open any of the Swiggy, Zomato, and any of these Blinkit, etc., if you open any category, you will see very strong presence of the number one, number two brand in each category. So I will say, yes, that caused disruption. And that's why if you see HUL skincare is not growing to the desired level, but because of Minimalist, now I think it will happen. So I would say this is just a disruption which has happened for the good of the industry. But from here on, legacy players will come back. Yes.
That's a very interesting perspective, Abneesh, and I second that entirely. Legacy companies are quick to snap up DTC players that have caught the imagination of consumers. Now, the question is, if this is going to settle in and legacy companies are going to be back, what should investors be looking at? Which are the strongest or positioned well to take on and be in tune with newer customers?
So here again, if you see, a few important factors will be there. Which are the legacy companies which are more aggressive in terms of acquisition? So clearly ITC has done in the FMCG many acquisitions, HUL has done, Marico has done. So I will say this is very important factor. Companies in the legacy space which have not participated in D2C, I think they should use this opportunity. Currently, there is a lot of D2C players who are available for acquisition. I think that's one important thing. Second is companies which are looking to sacrifice some gross margin, EBITDA margin to get back volume growth. I think HUL, Asian Paints, all these companies we really like, even Nestle, even Marico. Those are all companies which are willing to sacrifice some margins, but more importantly, they are targeting the volume growth. I think that's important. So from a topics, we like HUL, we like Britannia, we like Bikaji, Nestle. We also like Asian Paints in the broader discretionary space. See, Paints has not seen any GST rate cut, but my sense is because of the rains, yes, the demand could get delayed, but there will be a lot of customers who will be having more disposable income. So you will see that even paint kind of category will benefit in H2 because of that.
Mm-hmm. Okay. Abneesh, where are you? I mean, it's a bit of a difficult question, but where are you not constructive on within the consumption space currently? Because with the GST cuts, almost everything seems primed for growth. Where is it that you have the least preference?
So 2-3 things here. One is, of course, if you see in the liquor space, we'll be underweight. Because in Maharashtra, we have seen 30 to 50% tax hike, MRP hike. So Maharashtra, if you see for United Spirits, is almost 15% of the market. So you will see, I think, double-digit volume decline for many spirits players in Maharashtra, and it is 15% of the market for the market leader. So slightly near term will be underweight, but FY27 UK FTA kicks in, so it's more of one or two quarters of pain. Second will be cola category, right? We have been highlighting Campa Cola impact on the sector with 10 rupee price point, 30% dealer margin, very aggressive rollout, advertising. I think that is one category where the summer has also not lived up in both Q1, Q2, so we'll be underweight there. I think these are the two ones. Otherwise, in H2, you are right. Most of even the Imami and Dabur kind of companies will see benefit in the Ayurvedic portfolio. But valuation comfort is definitely there. So yeah, liquor space and the cola category will be underweight.
Thank you so much, Abneesh, for speaking with us. So, okay, the big takeaway that I thought was interesting, Neeraj, the legacy players are not going anywhere.
He countered my point very, very strongly, and he tracks it much closely.
Yeah.
So, interesting.
Yeah. So
what do you think of it?
I think so, yes, because
I disagree.
Look at the alacrity with which all of your brands are being picked up so quickly, like a Meetigo, for example, picked up by an ITC, a Minimalist picked up by an HUL. So they're willing to spot and pick up those brands. And if you are now a company who wants to make a cream or a toothpaste or a blah or an XYZ, you are up against giants several times your size with distribution networks which go back decades.
Yeah.
So you can't say, okay, I want to sell everything online, because even online, it's not really as democratic as it seems like. So I think there is something to it. And beyond a point, for your staples, you might want brands that you can trust and have a legacy. I don't know. Something to be said for legacy brands. There is a different kind of a legacy being built here, and we talked about this a little bit at the start of the show. But Swiggy has launched yet another